Listen, this week's tax tea is juicy. Tax tea of the week is a bookkeeper who stole over $800,000. I don't even know if a bookkeeper is the right word. Let me just say a woman who was doing bookkeeping who stole over 700,000, actually 7 to $800,000 from her employers. Okay. Just to recap this situation, Miss I forget her name at this point. I think it's let's just call her Kimberly. So Kimberly is going to be getting 9 years in prison. Okay? 9 years in prison for this offense. And I'm going to break it down, and when I break it down you'll understand why. But basically the story here is this individual, I also want to preface by also want to preface by saying that she actually did this embezzlement and stole money at a prior company that doesn't even include these two companies that she stole money from. So I want to preface by saying that, and this happened in the 90s. It doesn't mention if she was convicted for that, but clearly not if she was still working. So this was in 1998 she did this. This case that where she's been convicted to 9 years in prison came out in 2022. So I don't know, maybe she went to prison, she got out and she did it again. You see, this is why it's important for somebody to have a public reputation, because why would you hire a bookkeeper to do your bookkeeping? Probably didn't do any research. I'm sure if they looked up her name, they would have realized relatively quickly that she was convicted of embezzlement. But I digress. So the story here is there are, in one circumstance and situation, she was hired by, I think the name of the company is M5, and she was hired by the company to manage the company. The company had like 5 to 6 Denny's, the stores, fast food chains, was managing those Denny's stores, and she was responsible for payroll. She was responsible for issuing payment to vendors. And so basically what she was doing is she initially, and this is why I'm like, this is so shady. She would come in, she worked for a couple of years. She didn't start the embezzlement immediately. She kind of gained their trust and became a loyal employee. And then she was promoted up the ranks. And so while she was in the position, the leadership position, she would write checks to vendors, but she would create fake vendors. And basically what she was doing is she was paying that money to herself. And so she would create fake bills, she would create fake invoices, and then she would issue checks from the accounts to those fake clients or fake vendors, sorry, and then file with the corporate Denny's office for reimbursements for these vendor payments. So basically, she would create the expenses and then turn around and file for corporate to reimburse the expenses. And that's actually how she got found out, because she filed those expenses. And I think the Denny's corporate office did maybe some like investigations and found out that these vendors didn't exist. And then she got laid off from that job. So they fired her for that. So they fired her for that. Then she went to go work for another company. So I think like at this last company, she had stolen like maybe $300,000. And so at this next company, she went to the new company. I think it's like they gave company 3 was the name of the company because they didn't want to, I think disclose their name. But basically company 3, she went to work for them. She started out as a bookkeeper, bad idea, and worked there, I think for like maybe worked there for a year, and then she was promoted to general manager. So you know what I mean? Like she was doing her thing, developing trust. So she gets promoted to general manager, and that's when the fraud starts again, or the embezzlement starts again. So same situation, creating fake vendors, writing checks to herself. And so she's been finally caught. And so I think in 18 months, she stole $350,000 to $400,000 from this construction company. Wow. And so, yeah, so this is the story of Kimberly.
It's very bad. This is a crazy story. I mean, well, one is if the people who are hiring them, listen to some of the red flags that we talked about, they would have probably avoided hiring this person.
Yeah.
And there's some additional red flags that I see in there. And I think one of them is, if you are the person that is running a business, and this is something that I tell a lot of, all of our clients, is we run a spend by vendor report so they can see here is how much money we've been paying each of these vendors. And the reason why we run it is because we want them to be able to see, has somebody set up a fake account? Because if there's a vendor in there that you don't recognize and you're like,
Exactly.
hey, something looks off on this, you'll be able to catch stuff like this. So, I mean, I think the fact that that wasn't being done was a mistake. I mean, that was a red flag issue. And then also, I think, depending on the nature of like what her role was, I mean, there should be some limits on like how much money a person can move between accounts, or there should be especially if you're talking about making large bank transfers, there should be some type of secondary approval on these payments. Like, one person should not be allowed to create vendors and issue payments without somebody else having to sign off on it.
Exactly. Yep. No, I agree. I think that was actually the red flag I noticed, is she had too much control. Like, you're the general manager. Like, okay, you should be able to maybe issue requests for vendor payments, but you shouldn't be able to write the checks. Like, I think those are some of the kind of like the checks and balances and the controls. Like, someone should be validating that. Like, for example, even like if it was, hey, the owner had to sign those checks, right? Where it's like, okay, what is this check for? You have to explain what it is. But I think, sometimes I've noticed, like, I think maybe because business owners who, before they get an accountant, they're used to kind of doing everything from by themselves, whether it's, doing payroll and paying vendors and all these things. And so when they hand it over to someone like their bookkeeper, for example, they just assume, oh, well, everything I was doing, like, hey, go ahead and take responsibility for it. But like, no, that is not what it should be. You should not. And I think maybe this is also another red flag. If your accountant is asking you for full access to stuff, that's a problem, because especially now, because technology, bank accounts, a lot of bank accounts allow you, I know Chase for a fact allows you to add an accountant to your bank account. And this accountant has limited access. They can't make any transfers, all that stuff. They can just see transactions and be able to work what they need. And so I think that's another factor, is there really wasn't a checks and balances to make sure that she had control to only what she needed to do her job. And I think in some respects, there wasn't any oversight in basically validating this, because it makes no sense to me that the general manager of the company also has access to the financials and is doing the bookkeeping.
Yeah. Yeah. I mean, I would say, yeah, for this situation, I think the action item, for businesses to avoid finding themselves in this situation is, I think, first is going back to the 5 red flags we shared. Number 5, what is the person's public reputation? Like, if you do a background check, like this person, by the time they got to the third company the last company where they got caught, they had already embezzled money from 2 other companies.
That's the other thing I was thinking, Terrell. Like, if they had called to get a reference from her prior employer, and now, I mean, she could have very well made up and said, made up a company, or just said she didn't work with this person, but whatever. If they had called and actually understood, like, okay, who was your former employer, they could have probably found out that this person was fired, because she probably lied and was like, well, I left to pursue bigger opportunities.
Yeah, I mean, I agree. I mean, and I will say, we're not HR experts or legal experts in like what questions you can or can't ask, but I do think doing some type of background check, especially if you're going to hire a person to be an employee within your company, you want to do a full background check. If they're going to be a contractor, a third party, you definitely want to do some type of, reference check, some type of reputation check. And the thing is, if you can't find anybody to say something good about this person and the quality of their work, they might not be the right person for you. And I think the other thing is, a lot of business owners don't know that when it comes down to having a bookkeeper, you don't need to give them unlimited access to your information. You can give them view-only access to where they can view the information that they need. They can update that. And then also the third thing I think is that your bookkeeper, your accountant should be, providing you with some type of spend by vendor summary, so you can see who have we been paying. You can quickly give that list a review to say, hey, is there anything in here that looks off? Or the same thing with employees, is making sure there aren't any fake employees set up in the system, just to make sure that, hey, there isn't any funny business going on. So, wow, I would say is this tax tea is evidence as to why the red flags need to be paid attention to.
Yeah, I thought it was a good one for that. So yeah, that wraps up our tax tea for the week.
Awesome. Well, thank you for sharing that. And thank you everyone for tuning in. Till next time.